What's going on, guys? D. Anthony here with Evolution Traders. In this video, we're going to go over how to trade the futures market, specifically the NQ, which is the NASDAQ 100. We're going to go over one of the strategies that I teach and implement inside of Evolution Traders and also here on YouTube. Again, with the information that has been provided in a lot of my videos, you can build yourself a fantastic trading playbook as long as you manage your emotions first, manage your position sizing second, and allow yourself to be patient and wait for these setups. You're definitely going to be a lot more consistent and profitable in the long term. Remember, not every strategy is 100%. Not every strategy is a, set and forget end all be all. But with that being said, we're looking at the NASDAQ futures. You guys already know I kind of start to look at the chart starting around 5:30 a.m. Pacific Standard Time, which is an hour before the New York session opens. So get a little bit of that pre-market action going. Normally we get some numbers. Sometimes there's some headlines or news that kind of comes across the board. Today was a very busy day. We had some data that kind of dropped at the top of the hour. Then we had some Fed speaking, Powell, this, that, and the other. With that being said, we're looking at the first setup. This was actually the first setup that I took. So at 5:20 in the morning, we closed below the 20 and the 200 SMA. You can see this light blue line here. It might look green on your screen. This light blue line here is the 200. The white one is the 20 SMA. So notice that this candle at 5:20 in the morning closes below the 20 period moving average, which is just a 20 SMA. Why do I use the 20 SMA versus the 21 EMA? It's just the way that I was taught. Been doing this for 9.5, almost 10 years come the summertime. I feel that with the simple moving averages, there's a little bit more weight and there's a little bit more, for me, a little bit more trust. Okay. Now, again, sometimes the 21 and the 20 EMA, they're almost similar. Again, the exponential moving average is just going to travel a little bit tighter to the price action. Sometimes it gives you, an earlier entry. Sometimes it gives you a later entry, so forth and so forth, right? It is what it is. The point that I want to make is that once you have a playbook, right? You have a strategy, you have an edge, something that you're waiting for in the market. There's no need to really dictate and try to change. Well, what's better? Well, how can I, add something else? Guys, there's a million different ways to trade the chart, okay? I'm not saying that this is the only way. I'm not saying that this is the best way. I'm not even saying that this is a better way to trade price action. What I'm saying is that this works for me along with a lot of the other traders inside of Evolution Traders. Now, again, is this the only strategy that we use? Is this the only setup that we're looking for? Of course not, but it's one of them. And it's the one that I like to focus on the most here on YouTube. So notice how we close below at 5:20 in the morning here, and we get the confirmation on the next candle. So your stop loss is above the reason why candle. Your reason why candle, just for definition and clarity, your reason why candle is the candle that closes below the 20 SMA or above the 20 SMA, depending on if you're going long or short. Now, your stop loss is always going to be above your reason why candle or below your reason why candle. However, I want to put something in parentheses or in quotation marks. Me personally, I use a stop loss over my reason why or under my reason why on a close. So let me make this clear. If, for example, the next candle that I just pointed to here with the drawing tool, if this were to wick above and the candle still has not closed yet, it would not stop me out. So I know that there's some people that put a hard limit order stop above the reason why candle, and sometimes price goes above and never closes and then comes all the way back down. This technically would wick you out and the move would still go in your favor. That's why I always use a candle close. Now, sometimes am I giving up a little bit of a bigger loser waiting for that candle to close on my stop loss? Of course. But, over the series of 10, 20, 100 trades, it works more than it doesn't. Okay. So what I'm saying is when the trade setup does work in your favor, it tends to really work in your favor versus those few times where it kind of stops you out and closes above. So with that being said, once you enter into this trade here, you're looking for two things. you're looking for, and let me add it onto my chart, you're looking for a 1-to-1 on the average true range. Okay, so I've spoken about the average true range many of times on the YouTube channel. The average true range that I'm using here is just a 14 Wilders. And basically what I'm looking for here is at that specific time frame, when the reason why candle closes below this 20 SMA, all I'm looking for is what is the ATR on that 5-minute time frame, because that's the time frame that I'm trading. The ATR is sitting at 13-14 points. So if, okay, because no trade is ever for sure, if I get 13 or 14 points off this move, I start thinking about taking profits. Now, sometimes do I just snag them right as we're slamming into 13-14 points? Sure. Sometimes do I hold for a little bit longer? Sure. The point that I'm trying to make is that more times than not, if you look to take profits around that 5-minute ATR, somewhere close to it in that vicinity, you're going to be a lot more right than you are wrong. The second way you can set a take profit is a full 1-to-1, meaning if you're going to risk around 20 points here, the range on this one particular candle is 20 points, you're looking to make at least 20 points. So somewhere close to, again, remember, nothing is concrete, nothing is, black or white. There's always a little bit of a gray section there. And that gray section is sometimes you take profits off at 17 points. Sometimes you take profits off at 22 points. Sometimes you let it run because there's just amazing momentum. But the theory is if you're going to risk around 20 points on this one particular setup, you want to make at least around 20 points, if that makes sense. This trade setup here did pay at a 1-to-1. That was your only trade setup of the day. Now you can see here right when the market opens at 6:30 in the morning Pacific Standard Time, we have a little bit of this bottom here, followed by another strategy that I do teach using this as a stop loss, trying to catch this pop here. However, the next setup that you get is located here. Now notice how when we close over this 20 SMA, we have this lingering 200 period moving average right above it. So this supply zone here could be also used as an area to take profit if you do take this scalp here. Also, if you look at the pre-market highs, which is here, could also be used as a take profit if you're in on this news. So this big candle here, there was some numbers, some news that dropped. It really exploded at the top of the hour there. So again, that's where the big volume surge comes from. However, if we just stick to avoiding what's going on in the news, what's going on with the numbers and the headlines, because again, sometimes that tends to get people, a little bit more cautious. Sometimes they're a little bit more hesitant to take trades because of the news. If you just simply focus on the price action and the technical analysis, regardless of news, either you're going to get stopped out or you're going to take a winner. There is no in between, right? There's a lot of other variables and there's a lot of other factors and confluences that are going on in the market that are, of course, obviously going to, sway which way price action is going. But if you simplify things into very, very simple rules, then it doesn't really matter what is going on around you because you already have a game plan. So with the game plan, we close over the 20 SMA. This becomes your reason why. Where does your stop go? Your stop goes at the low of that reason why candle. Now, again, this is a perfect scenario where you can see price closes above the 20 SMA, and then the next candle confirms, however, goes below your reason why. So if you are one of these people that sets a very tight limit order stop, you would have been stopped out and would have missed this 83-point candle move. Now, again, depending on your position sizing is going to depend on whether you are getting stopped out prematurely and whether you are setting those hard limit orders. So let me give you a case in point. If you're trading one or two mini contracts, you can't really afford to sit in too much drawdown and let it go below the candle and let it just keep falling down, because you could risk blowing up your account or risking a tremendous amount of money. However, if you're sized appropriately, for example, look at this range here on the reason why candle is 17 points. Okay, so we can do very, very quick math. For every one micro contract, which is ticker symbol MNQ, For every one micro contract, you're going to lose around 32, 33 bucks. Okay. So if you're trading 5 micro contracts, the most you're going to lose is around 150, 160, 175 bucks, right? Depending on where it closes. Okay. So immediately once you get into this trade, it does come down. And at some point you would have been in the negative. However, very quickly whips around. You could have taken profits here at the 200 period moving average, which is sitting at a price of 18,297 from an entry price of 18,280. So this is about a 17 point. This would have been your 1-to-1 here on this range. You could have also tried to target the pre-market highs as well. This candle, the way it moves so quickly, it was very, very easy to kind of sit in. In fact, I actually took a couple of scalps on momentum on this 5-minute candle bar, took the immediate 20 SMA, played long here, sold for a very quick gain, and as soon as we started to break above the 200, just quickly got in for a scalp, got out, got in, got out, so forth and so forth. But those are your 2 major big setups today. Now the next setup that really happened was around 8:50 in the morning Pacific Standard Time. You could see once we put in this high, right, we kind of got a little exhausted, started to pull back. It started to really chop around and consolidate, showing no movement higher. And then we got that close below the 200 period moving average. Now, when you're this extended away from the 200 and the 20 period moving average, you can always expect some type of pullback. I'm not saying that it's going to pull all the way back, although sometimes it can. All you're really looking for here in this particular situation is if you look at the range on this candle, 27 points, and you look at the ATR around this time, it's around 18 points. So let's kind of cut that in half. If we can make somewhere between 18 and 27 points, 20 points, 22 points, 23 points, we want to really think about taking those profits. And let's just kind of do the math quickly. Your entry would have been below on the confirmation through 18,406, and in a matter of 10 minutes goes down to 18,383. So this is around 20 points here. If you would have waited another 10 minutes, it starts to pop back up and actually goes down to a low price, down another 10 points to 18,376. So, this was an easy 20 to 25, almost 30 point winner there. Realistically, from the pre-market, right, an hour before the market opens until essentially, the first couple of hours after the market opened, there was only realistically 2 to 3 setups, right? Your first major setup was in the pre-market short. Your second setup was on the bounce play here off the news. And your third setup, in my opinion, was over those pre-market highs, right? On the big news candle. And you could have done one of 2 things. Let it put in a new high price, let the new high price get confirmed, cut the body range in half, or use the 200 or 20 period moving average as your stop. Remember though, this is an 83 point candle. So for every 1 micro contract that you trade, potentially ran the risk of losing $150 per micro contract. You cut that in half, it's about a $75 loss per micro contract. So even if you're trading 2 to 3 micro contracts, it does go in your favor. You would have been able to catch a fantastic move. In fact, on the break over the 200 period moving average, as well as the overnight session highs on that confirmation, your entry price was somewhere over this candle. Once we started to confirm at 705 or 710, that high price was 18,353. I'm not going to say you're going to catch the whole move. Let's just go up 1, 2, 3 candles. It goes all the way to a high price of 18,406 from a price of 18,353. So this is still a 40 to 50 point move in a matter of 10 to 15 minutes that you still would have been able to capture here, right? Because again, we're never going to catch it here. We're never going to sell out here. We're never going to know that this is going to be the final high. Again, you just want to kind of get in, get green, get out. I hope this video helps you guys. Again, like, comment, subscribe if you guys would like to sign up with a couple of the prop firms that I trade with, Apex, Top Step. Those links are down in the description box. If you guys would like to trade with myself and the team in Evolution Traders, that link is also down in the description box below. I'll see all of you guys on the next video.